Welcome to Upside, the weekly podcast about all things affecting European venture. Now, the smart amongst you will notice that I am not Dan Bowyer. Our good man Dan is out climbing mountains this week. We told him to stay safe and return in one piece, as we definitely need him back to moderate. With me today is our good Lomax Ward, our very own life sciences luminary. Looks like he's back from the Lisbon beaches there. Looking good, Lomaxius?
Yeah, that's the permatan you develop when you live, in Southern Europe.
And we are today also graced by the presence of Dr. Andrew Scott.
God, my parents wish it was Doctor.
Well, what are we about to talk to today? First, we'll have a little roundup of the week of earnings releases. Anthropic on the AI block. New fight that's looming between the EU and Meta. Get out the popcorn, guys. We'll have a look at what's happening at ASML. New fusion consortium right here in the UK. Before we do, look forward to what's ahead and a deal of the week. Well, what are we about to talk to today? First, we'll have a little roundup of the week of earnings releases. We've got some great new earnings out from Arm and Spotify, two great European tech companies. We're also going to talk about all things Anthropic, the big behemoth on the AI block. After that, a little quick pivot back to the new fight that's looming between the EU and Meta. Get out the popcorn, guys. Then we'll have a look at what's happening at ASML. They may not be Anthropic, but no ASML, no GPUs, and no GPUs, no AI. So they are pretty important. Let's look at what their CEO has to share this week. Finally, we're rounding out the news about a new fusion consortium right here in the UK. Get a note of that. Now, before we do, look forward to what's ahead and a deal of the week. So let's get cracking. And to get started, Arm and Spotify, two very important European tech companies. They've both been announcing earnings this week and both had pretty good numbers, but markets interpreted them quite differently. Now, Arm announced lots of goodness around customer demand from AI, and the share price really has been great. It's been up 84% year to date and took another pop up this week. Spotify, on the other hand, well, they also had revenue numbers that were good and they're growing, but the stock is down 5% this week, 25% for the year. And in many ways, it looks like this could be stories that both are AI related, but maybe pushing things in different direction. Lomax, let's start off with you here. What's the read? Is this the AI economy bifurcating? Is this about CapEx or consumer spending or threat and opportunity from AI? What's your read?
So, firstly, it's we don't often get to talk about, big listed European tech companies. In fact, Spotify and Arm are basically the two preeminent examples apart from Adyen. And it's somewhat fitting or depressing, depending on how you look at it, when they actually post good numbers and the market doesn't really love it. In fact, the market kind of hates it. I think that's because a lot of the performance, even though these are record numbers for these companies, is actually baked into the price. And actually going forwards, there are some challenges that the companies are going to face, right? So in the case of Spotify, while the increase in the premium subscription numbers was well received and by customers and didn't see a lot of churn, I think they did disclose that cost of acquisition of customers is getting more, ad spend is getting more expensive. So actually to acquire new users going forward, it's going to be more expensive. So that will put constraints on growth. So while the subscriber numbers have been growing nicely, will that continue into the future? Arm is a little bit more nuanced and ties a little bit more into the AI story, of course. I don't necessarily see this as something to extrapolate more broadly into the market, other than, Arm has announced that they have, so maybe stepping back, Arm has historically been a license-only business, right? So they license this architecture, which is pretty much in every single mobile phone in the world. They announced, at the end of last year or beginning of this year, I think it is, their move into actual AGI CPUs, actually developing chips now. And that's been a big pivot to their business model. There was concern that would cannibalize some of their existing business because they would be competing with people who are actually their customers. And actually, the demand on that has been really, really strong. In fact, it's so strong that they now have massive supply chain constraints, which I think is one of the reasons why they do have a relatively lukewarm reaction on the market, is because they've now moved into this supply chain bottleneck. But ultimately, I think it's a bold move that Arm have made. If you look at the revenue that the business projects by 2030, the CPU numbers are going to way dwarf the licensing revenue. So it's been a kind of bet the farm company existential, bet by the management team. But I think I would suggest one's going to pay off in the long term. But there are going to be challenges such as this supply chain bottleneck they're finding at the moment.
Interesting. I mean, Andrew, we're seeing Spotify sort of under threat. Is that the market thinking that it could be kind of new generative AI music that could displace traditional streaming, or what do you think is happening here?
Yeah, where would I be to predict the vagaries of the market and what people are thinking? But I don't think the AI music is going to displace existing apps. In the same way that I don't think AI movies are going to replace traditionally made movies. Normally the market expands, so AI music will be used all over the place in different places, but people are still going to want real people to fall over, real people to admire, to fall in love with from a distance. So I don't think it's a threat. I don't think AI is a threat to the music industry itself, but I think it will. It may replace some revenue streams where it's far easier to press a button and generate the perfect music for your TV commercial or something else, where perhaps licensing would normally be the way to go. But even with that example, people use certain music in TV advertising because it evokes certain emotion from the audience, because the audience associate the music with certain feelings or a certain vision or a certain aspiration. So,
yeah. Any thoughts on the expanded Arm strategy?
Yeah, I think it's keeping up with the Joneses, right? The Arm was a licensing business for a very long time. They've got to continue to expand, and I think the current stack isn't going away in terms of AI and the need and the requirements. I think it's just reflecting the expansion of the market, right?
I think, if you look at the Arm business, they're basically growing, they're forecasting by 2031, 15 billion of revenue from this AGI CPU revenue. 15, so they've gone from 0 to 15 in 5 years. And their core licensing revenue was they're only forecasting it at 10 billion, right, by 2031. So what you're seeing is clearly they're basically monumentally moving the business in a relatively short amount of time. But as Andrew says, it's probably something they need to do, or they felt they need to do, both as a defensive and an offensive move, I would say. Just going back to Spotify, I think the interesting thing which may tie into the broader AI narrative, rather than focusing on distribution rather than actual content creation, is actually if you look at the Spotify numbers, they're pretty good, for a mature listed tech company. They're growing. Premium revenue was up 10%. In Q1, gross margin was up 33%. Like, actually the numbers are not bad, but the ad-supported revenue was down 5%. And that may be what people are interested in, because that may be being disrupted by AI. So I think there's a question mark as to distribution for Spotify. Are the channels changing? And what does that look like in terms of customer acquisition going forwards?
Interesting. I suppose on the Arm side, there is another part around kind of the GPU, CPU shift. It's a while since we stopped thinking about CPU companies as being cool, and it's been NVIDIA and the GPU businesses that have been driving the industry. But actually, as AI is shifting from sort of legacy Gen 1 generative AI models to agentic models, you're seeing a shift in the workloads, where, of course, every computer needs a CPU at the heart to, make sure it runs. And so there was a ratio between the number of CPUs you needed and GPUs that used to be 1 to 8. So one CPU could drive sort of an average 8 GPUs. Well, that's shifting because the new reasoning models and agentic workflows, they have all these tool calls. And every time you have a tool call, every time the reasoning model of the agent goes down and calls the file system or fetches data from the internet or does some operation that is not a GPU operation, well, it's a CPU operation. And actually, the expectations that the ratio could shift so that rather than it being 1 to 8, it becomes 1 to 1, which means that either the amount of GPUs we're selling is going to decrease massively, or the number of CPUs we're selling is going to increase massively. And so the CPU market is going to explode. And so I think some of the optimism is at the heart of this, of just how many more CPUs we might actually be needing in this industry. So that's potentially an aspect as well. Okay, very good. Well, let's stay on the AI lane. Let's move over to Anthropic, because there's no week without major Anthropic updates. And the company was in the news this week announcing plans for $200 billion spend with the Google Cloud platform over the 5 years from 27 onwards. That's now 40% of Google's nearly $500 billion backlog. And if you take the Anthropic and OpenAI promised spend with the hyperscalers in combination, that's now more than half of the $2 trillion cloud backlog of the hyperscaler. So that's obviously a massive number. Just this morning, the Financial Times reported that Anthropic has passed 45 billion in ARR. And listeners will recall that this is up from around 9 to 10 at the start of the year, and a 45x on the start of 2025. So, a staggering amount of growth that continues. The company is now working on a new round of funding, reportedly a $50 billion raise at a valuation that could exceed $1 trillion. So we've discussed an Anthropic IPO on the pod here, but the company seems to have so much money thrown at it that it might not happen in the near term. Now, at the same time, we've seen Anthropic and OpenAI both announce new joint ventures this week. Anthropic, they announced that they've launched a new JV with Blackstone, Hellman & Friedman, and Goldman Sachs to build a services business that will implement AI at big enterprise firms. And at the same time, OpenAI has announced a similar initiative with TPG, Bain Capital, and Brookfield to implement AI at enterprise firms. Now, the idea seems to be that AI can unlock an ungodly amount of productivity in enterprises, but it's hard to get right, so we need consultants and engineers to make it work. Lomax, let's start with you here. I mean, what are your thoughts on the continued rise of Anthropic? I mean, when they finally do IPO, will they be the only company left worth paying any attention to?
Yeah, it does seem to be going that way. I mean, I'm conscious that these things can change from month to month, week to week, day to day almost. But Anthropic definitely is sort of, to steal from Zoolander, like so hot right now. Definitely it's the company that has a really strong positioning for a few reasons that we may talk about in the context of the other things that you mentioned, including AI safety and national security, et cetera. I think Dario has managed to position the company incredibly well in the way that actually Sam at OpenAI has well publicized, had their struggles in terms of the perception in the market. And actually, if you listen in the corridors of family offices, the secondary market, the kind of private market, secondary market, there's definitely...
Whose corridors have you been lurking in?
Well, it tends to be digital corridors, right? So WhatsApp groups generally.
Even worse.
Or the lobbies at conferences. You find that, or maybe the washrooms at certain, members clubs, but you find that there is a lot of appetite for Anthropic in the private investor community, and actually OpenAI is nowhere near that. And in fact, there'll be quite a lot more sellers than buyers potentially. So I think that, per your point, now Anthropic has the ability to raise 50 billion potentially at north of $1 trillion, which is mental, because the last round was only very recently at the end of last year or beginning of this year was at 380. And actually at one point it was sitting at less than half the valuation of OpenAI, and looks like it will surpass that quite quickly. I mean, that's fairly reflected not only in the perception. Obviously, in venture, we talk about, narrative and fundamentals. Anthropic seems to be nailing both at the moment, right? So, we talked about narrative when you move to fundamentals. As you alluded to, Mads, the revenue ramp is insane. Now at 45 billion of ARR, and the having only been 9 billion. 9 billion at the end of last year? Is that right? The growth is just, we're only in beginning of May. The trajectory, you extrapolate that out. One thing that we've been, and then that also ties into the CapEx, where you're saying, well, look, between OpenAI and Anthropic, they're now accounting for over half of the 2 trillion of capex projected in the industry, which has been a big concern for people. Was like, well, actually, how are you going to generate the revenues and the free cash flow to justify that capex? Well, if they keep going at this rate and you project that out over the next 2 years, well, then, Anthropic will be a 250, 300 billion revenue company. And the free cash flow on that's going to be pretty juicy. And, let's imagine that sort of 50% gross margin. Let's imagine they're spitting out at least, I'm doing very high level numbers here, I don't know, 100 billion of free cash flow every year, potentially. I don't know, like maybe you guys have a different view on that. But if they can get to that position, then suddenly the capex starts to look justified. That's a pretty good start. What else? What have I missed? I think you also, you mentioned the Google deal. Anthropic have done a 5-year deal with Amazon. They've got a deal with CoreWeave. They're doing deals all over the shop. But, they're feeling confident. The wind's in the sails. And OpenAI...
And they've just done a deal with Musk, SpaceX.
Yeah, well, there you go.
Yeah. In terms of the new joint venture that they've launched and that OpenAI has launched, I mean, maybe that's one for you, Andrew. Do you think that's likely to be sort of old school Accenture type consulting or more like a high margin Palantir style business?
Yeah, that's exactly what I was going to say. It's a blend, isn't it? Kind of part Palantir, part systems integrator. And, it's also... It suggests the bottleneck has shifted from model capacity to enterprise implementation, and trying to embed your systems inside those companies. And I think it's also it effectively locks up, securitizes kind of future enterprise cash flow by getting embedded deeply into these companies, right? Rather than waiting for that organic bottom-up adoption that you might see with a Slack or with a SaaS company. So they're building kind of captive distribution through these some of these PE portfolios and through some of these enterprise players. And I think one of the, I suppose, if you're looking at a contrarian view, one of those might be, does this risk that these companies, these frontier AI companies, turn into very kind of large, expensive customer services businesses rather than high margin SaaS businesses? If every single deployment at scale needs a huge number of sales engineers and on-site integration people, et cetera, et cetera. So it'll be interesting to see how it evolves. And certainly, when we look at even early stage at our portfolio of companies, we did some AI very early on, and one of the biggest blockers was not that the product or service didn't provide efficacy or didn't provide a good result for the business or wasn't good value. It's just that the businesses, including enterprise customers, did not have the internal understanding or were not prepared to deploy this technology. So I could imagine that at scale, yes, you can have individuals at a desk, running their emails through ChatGPT. But that doesn't really unlock the full power of AI to do that. You've got to be deeply embedded in these complicated companies.
Yeah, and I suppose that will yield higher quality revenue as well going forward, maybe ahead of a potential IPO. Lomax, do you have a point there?
Yeah, I think it definitely ties into the IPO story. I mean, it's no coincidence they're both lining up IPOs because they were in theory running out of road on the private markets, but it feels like Anthropic might just be able to squeeze out one more round. But the
100% they are. 100% they are.
Exactly, but they need to. This is definitely with a view to the IPO. This story. I mean, it's actually these JVs sit at the confluence of, I guess, two trends. Like one is AI, obviously. And the other one is actually PE that's been going through a kind of down cycle, right? In terms of depressed returns. Everyone feels that, which is driven by a few factors, like, PE's undergone a Cambrian explosion in the last 20 years. So, if you've got so many companies that are optimized to the nth degree, like how much more can you optimize? Well, suddenly AI comes along. So the PE shops are thinking, well, our returns profile looks worse. What are we going to sell to LPs now? Well, suddenly we do these JVs with OpenAI, Anthropic. They can effectively juice the companies that we've invested in. We're also going to invest in the JV. I don't know whether they've done that as GPs or LPs. Do you know what I mean? Whether it's the PE firm itself.
They're JVs.
They're JVs.
They're JVs.
The PE fund rather than the LPs of the PE firm. That does actually, in theory, create conflicts, but I'm sure they figure that one out. But the interesting point is that there's 7% of US GDP sits in private equity-backed companies, roughly 8 to 9 trillion of market cap sits, depending on how you value it, sits in private-backed companies in the US, private equity-backed companies. So actually, if you can use AI to squeeze 10, 15% more efficiency out of that and increase the EBITDA margins, which generally most of those companies either increase the EBITDA margin or increase the actual underlying EBITDA, you are going to, it's a kind of a win-win situation. Anthropic and OpenAI generate more revenue, maybe using this Palantir model with, maybe you need to have the kind of forward deployed engineer. It will be kind of quasi-service, tech service revenue, but that's probably okay at the JV level. But ultimately for the P, which would be great for Anthropic and OpenAI, and then the PE funds underlying portfolios will both, it ties into both the narrative and fundamentals again for the PE firms, because they're like, this is actually going to improve underlying EBITDA. And to all of the LPs that are starting to fall out of love with private equity, like, look at this, AI is going to come to the rescue and help us in our fundraising and show us how we can take the private sector in the US and juice it to the next degree.
Everyone's a winner. Isn't it fabulous?
Yeah, like I think it's great. And actually, in a way, this is quite similar. Is it not quite similar to the Project Prometheus thing that in a way that that Jeff Bezos is working on, which is in the context of robotics, right? So Project Prometheus is building, like robots for industry, for physical AI, for industrial automation. And then they went in conjunction with that and raised a massive fund, which will buy companies which will then implement the robots to implement the industrial automation. Quite similar to that, actually, in terms of asset owners doing deals with tech companies, whether it's a fund or a joint venture arrangement, to come in at a systematic level and implement that technology in the portfolio.
The realization that with product-led growth, you can get so far in an enterprise that perhaps not very far at all. You need some services bots to make it happen. Let's flip over to the safety and security angle, because in parallel with all these exciting revenue growth numbers and the JVs and the funding announcements, etc., there's been continued discussion around Anthropic's Mythos model. Now, we know it's a model so capable at hacking things that Anthropic initially withheld release. Dario Amodei, who is the CEO of Anthropic, he recently flew to the White House. Now, you'll recall that the Department of War, they recently labeled Anthropic as a supply chain risk due to disagreements over how and where the Anthropic AI could be applied. It seems that relationships have been patched up between Dario and the Trump administration. And in parallel, the U.S. Center for AI Standards and Innovation, they've recently signed up Google and Microsoft and xAI to some new pre-deployment evals. And from what I know, Anthropic is not in the framework yet. So to some extent, the focus here seems to be on AI safety, which maybe feels like a bit of a hark back to the Biden era. Only Trump doesn't call it AI safety. He calls it national security. So Lomax, one for you. When it comes to AI safety, is this about necessary regulatory oversight, or is it regulatory capture, or do we even know what to distinguish kind of good oversight from rent seeking in this space?
Yeah, so a few things to unpack here. I mean, AI safety feels like a bit of a dirty word in the tech circles, which was lauded by Rishi Sunak 3 years ago when he launched the AI Safety Summit, which kind of died a bit of a death. But now the Americans, having been quite let technology run, like we need to let things play out. Suddenly, Mythos has got people in the White House to wake up and smell the coffee. Probably not a coincidence that David Sachs has just finished his role as the whatever he was AI czar in the White House. So the tech executives leave. The more political figures, Susie Wiles, as chief of staff, get a little bit more involved and think, hang on a second, what's going on here? And look, I think this is not a European style, let's go and regulate the hell out of this. let's wrap a lot of red tape around this. But I think it is a signal from the White House. So Trump has a very advanced draft, I understand, of a 15-page executive order, which will effectively put this into practice, of basically implementing a bit like the FDA for drugs in the US, like a bit of a review process in the context of like new releases of models. Now, clearly, this is being done by the Republican, the Trump White House. I don't think they're going to be trying to put too much of a stopper on this and strangle and suffocate the speed, especially in the context of the broader race with China, right? But I think is an acknowledgement that, hang on a sec, this stuff can be potentially too hot to handle, and we need to have some level of oversight. So I don't think it's overreach yet. I mean, we haven't seen the details of it. There has been, the name I think is CAISI, CAISI is the acronym, which does exist already, which is a bit more of a kind of voluntary group of kind of which leads some kind of review process of these models, but that's not from the not a piece of legislation. So I would say that it's a step in a different direction for Trump. It is a step in a slightly more kind of, you would say, European or like Biden-esque direction. As I said, I think they've been a bit spooked by Mythos. I don't think it's a bad thing. Let's wait for what the details say. I think if governments want to have some level of oversight on this incredibly important fundamental like technology that could be incredibly dangerous in the wrong hands, I don't think it's a bad thing. Clearly, if you went as far as the FDA process, which costs, hundreds of millions to bring new drugs to market, at least $1 billion these days, depending on, what data you use, then, you end up in a different ballpark, because you will potentially stifle innovation. Final thing I would say on this is that Dario,
before you go there, Lomax, let me bring Andrew in on this one, because Andrew, you're normally sort of our pro free market champion here, and I mean, is this effectively just kind of the incumbent Frontier Labs pulling up the ladder and saying, great, we had a completely free run to do whatever we wanted, steal all the IP, develop the models, and now we're going to put some government regulation in place, making it much harder for people to come after and follow us? Or is this necessary regulation? How do you think about it?
Well, anybody who's listened to my droning on this podcast previously will have heard me describe AI as the equivalent of nuclear weapons. Like if you extrapolate out 10, 20 years, that's the level of importance of this technology. And I think this probably reflects, Washington's alignment with that. And they're essentially quietly admitting that frontier AI is no longer just a tech product; it's a strategic infrastructure, right? Sort of alongside kind of nuclear, alongside biotech, more than just software. So it's interesting that Trump sort of campaigned against regulation, but then he's essentially sort of enabling this push forward of the AI safety that Biden was very a big proponent of. But I think it's also good for the big incumbents, right? Because entrenched incumbents with lots of money can afford to navigate regulation. They get to write the regulation. And if you end up with sort of mandatory pre-deployment testing, that does favor much larger companies compared to sort of much smaller, earlier stage or open source labs. It becomes a moat for those bigger companies.
So my speculation is what we're seeing here is a proposal to regulate from an administration that is notoriously anti-regulation. Is it fair to suspect or fair to say that maybe the only reason they are proposing to do this is because even they feel it absolutely is necessary?
Yeah, I'm not sure I dare speculate.
That's where the fun is. You're meant to be a pundit.
The true conspiracy theory would be that, the administration have so much personal assets invested in these companies that they're now happy to pull up the gate, as they shut the door as they go through, or pull up the drawbridge as you cross the moat. Once you've crossed it, and that basically these companies have had a 4-year free run at this, enabled to raise hundreds of billions, well, certainly tens, almost hundreds of billions of dollars. And now actually, when it's become this big, everyone's made all their money on paper and about something, you suddenly pull the drawbridge up. I think that's probably a little bit cynical. I think it's probably a combination of the mythos model, like, and commercial people starting to get quite scared here. I think it probably is like a bit of a change of like, some people, like maybe it is internal in the White House, maybe it is Susie Wiles, maybe, David Sachs leaving actually is a big important thing. And actually that there are people there who are generally skeptical of this technology or scared of it. So I would distance myself from those conspiracy theories, but I would think it's more something to do with that.
Very good. Well, with that, let's flip back over from Washington to Brussels, where we'll talk about a new fight that's looming between Meta, which used to be Facebook, and the EU Commission. Now, we know that Meta, they've had their issues with data privacy over the years, but actually this upcoming fight is not so much about privacy, it's about competition. Now, Meta, they've built AI into their apps. We know that Zuck, he has invested billions and hundreds of billions in AI and CapEx and staff and teams, etc., without having a hyperscaler or a commercial model. So for them, it's all been about building the AI into the business itself and benefiting from it. And one of the things they've done there is they've been including new AI models in WhatsApp, which is used by pretty much every single human being outside the United States. Brussels is fine by that, by the way, but they say that Meta needs to allow users to use other AI models, not just Meta's. Meta has said, fine, we'll agree, but then those other firms will have to pay. Brussels, they've now rejected Meta's pay-to-access remedy, and there's now speculation that they could force Meta to open to other AI models. And it would be the first time the EU would force a platform to open AI competitors access at no cost. Now, WhatsApp has got more than 3 billion users globally, so it's a big deal. Lomax, I mean, do you agree with Brussels? Where's the line here between kind of an essential platform that there should be open access to and private rails that somebody has built and owns and should be able to monetize as they see, right?
It's an interesting one, this, because the Americans haven't gone in the same direction, right? Which I think the American philosophy here is, as long as there's some competition somewhere in the stack, then we're happy for this to run. It may also be that, Meta won a huge case against the FTC recently, so I think they're kind of inclined not to go after them. But anyway, focusing on, look, I think this is a abusive dominant position risk that the EU is getting its teeth stuck into. As a citizen, it's a user, and also like business that would like to use this. Clearly, you can have some sympathy with the position that the EU's taken. Ultimately, though, I am personally more of the line that the market will just figure this one out, and that you don't start fiddling and meddling in this until you see something like manifestly unjust. I guess like the EU is probably called that position now. But I would probably, unsurprisingly, as someone who, invests in and partners with founders building companies, I would be inclined to, let the kids play in the sandpit and not start regulating, but intervening here, right? And for context, the intervention here is big. They have the ability to fine Meta up to 10% of global revenue. So that would be $16-20 billion, which is a huge amount of money. And actually, sometimes we say that the American tech companies see these European fines as just a cost of doing business. But when you're trying to release every single bit of cash that you have at Meta to invest in data centers, a $15, $20, $25 billion fine is something that's you're gonna take very seriously.
It seems like, Lomax, you're taking the solid Anglo-free market approach here. Andrew, Brussels are saying, look, we got a platform here with 3 billion users. Is that essential infra that should be seen sort of almost as a public utility and that there should be some open access to? Or do you agree with Lomax here that really it should be, up to the platform, up to Meta, whether they want other AIs to have access or not?
I think it's a genuinely tricky question. I mean, WhatsApp is effectively infrastructure in many markets. And when you think about where some of these platforms may go, let's say that X is successful in its expansion into a more generalized platform, as you see in some Asian countries where you can sort of buy, you can sell, there's banking services. I think X is going to add, I read they're going to add payment services soon. If that was to then, if the Western markets were to adopt those sort of applications, which they haven't to date, and WhatsApp then decides to go the same way, then you really are talking about a very sort of monopolized situation. So I think it's really tricky. I think having dominating a market, does make it very hard for other companies, the startups, to get reach and access. It's not impossible. So
I guess we have to admit that, although our instincts would be kind of free market, Anglo, let's, as Lomax said, let the kids play in the sandbox, or let business do what it needs to do to create value. There have been examples of situations where European competition regulation has forced the European economy to be much better. I mean, take banking, take payments, where the US system still is, absolutely hopeless with kind of cost and time and delay and sort of the ACH and some of those models, and where kind of the UK, faster payments and kind of the open banking we've seen in Europe has been far, far ahead of anything you've had in the US.
It also complicates the complicates liability when you think about fraud, when you think about security and spam, and then you think about the pressure also for some of these distribution platforms to take responsibility for the content that is shared. As soon as you have third-party agents involved, then whose responsibility is it? Is it the source agent? Is it the delivery platform? Is it the app that it's consumed through? It sort of starts to make some of these the implementation of some of the other safety criteria really complicated. If you remember back in the day with the first .com boom, then it was very much the ISPs that were being pushed to take responsibility for what was delivered through the service they were offering for dial-up or for broadband. Now it's shifted to the platforms, but as soon as you have then a platform which is agnostic from the point of view of allowing a third-party AI agent, then you really, the implementation, and you just end up in a blame game, right, in terms of bad content or in terms of fraud and everything else. I think it's really complicated, but you're absolutely right that without the government enforcing some level of open access, then it just becomes a one-stop shop until we wait another 5 years for WhatsApp to become such a dinosaur that actually something else comes along which is exponentially better. As you saw with sort of Skype was around for the one-stop shop for so long, and then it got replaced. But that cycle can take a very long time, and it can definitely scupper innovation.
Or like the problem becomes so big that actually this is more like kind of in the US style, as you've seen against Apple, right? Is that horizontal lawsuits take place. Companies bring suits against the dominant position, right, rather than the state intervening directly top down preemptively.
So certainly more to watch as we see what remedy the commission is going to settle on, and we're going to be looking forward to that here in the coming weeks. Now, next up is ASML, which is an absolute powerhouse in global tech. They make the machines that make the GPUs that make all this AI goodness possible. Christophe Fouquet, he became the CEO in 2024, and he's had an interesting first few years with absolutely rampant growth in everything in his ecosystem. Now, ASML, they have a monopoly on the world's most important supply chain, and that's nice. And at Milken recently, Fouquet, he said, no one is coming for us, with which we think he meant our strategic position and dominance is so strong that nobody can touch us. He also touched on competitors like Substrate, which is a Peter Thiel-backed company that's raised more than $1 billion, and he simply said they have huge challenges. The light source alone in our EUV machines took us 20 years to figure out. The machines we make are really, really difficult to build. Now, when it comes to competition and China, he agrees with Jensen Huang's assessment that there is a generation gap, i.e. we should sell China the prior gen, never the frontier, and that we are ahead. But even so, Lomax DeepSeek V4, the new model trained, at least partially, on Huawei's Ascend chips. We know that when we look at the specific chip systems, yes, the Chinese are behind, but it seems that more and more of the AI models that come out of China have more and more Chinese tech embedded. Is the no one is coming for us? Is it theater at the AI capability level, or do you think it is the truth?
It's a bit of theatre, a bit of posturing, but I think he's probably right in the context of the actual machines they make and the extreme ultraviolet lithography that the technology they've pioneered over the last 20, 30 years. They are light years, no pun intended, ahead of the competition. I don't know what you guys think, but maybe there's like 5 to 10 years to figure out what they're doing. So I think there's kind of no one can really touch them in the context of that. But what, as always, never write off the ingenuity of humanity, is the Chinese are kind of obviously for being deprived of these machines and are trying to push everything they can at the frontier in AI, is there are system level workarounds, right? So, yes, maybe if you don't have these machines, we've seen with the kind of, you look at the chip performance from NVIDIA versus Huawei, you've got maybe, let's say, a 9x kind of difference in speed, in power capacity. So that's kind of what you can achieve with these machines. But then the Chinese are developing workarounds, which I think is very, very interesting, and actually starts to eat into what this guy is, what the CEO is saying.
Andrew, how are you sort of assessing the West, kind of US, Europe, China competitive dynamic right now? I mean, when we hear the ASML CEO, is it more about his own moat and his ability to keep his margins up, or do you think it's also a wider point around the capability gap between the US and Europe and China when it comes to AI technology?
I think what's interesting is that even the US government itself has been vacillating on a lot of these policies around what technology to share, what not to share, what to allow companies to sell, what not to sell. And with so few companies able to build the highest end tech, it makes for some quite difficult decisions from a policy perspective and from a national security and sovereign capability perspective. So I think from ASML's point of view, they're still in an extraordinarily strong position. But it's not going to last, right? It's not going to last forever. Given the size of the market and the demands and, China's strategic imperative to catch up and overtake the US, I think it's only a matter of time. It's not if, it's when.
So when Fouquet is saying no one is coming for us, do you think it's just hubris?
I think he's making sure that he's saying what any stakeholder will want this company CEO to hear. There are very many company examples over history where you've had leadership which is overly arrogant, and but I'm sure internally from what we see them doing, it doesn't look like they are. But he's still going to put on a confident front, right?
Well, I mean, just on that and just on stakeholders. So, full disclosure, I hold shares in NVIDIA, I hold shares in ASML. And if you hear Jensen Huang from NVIDIA speak, he will always say that he's absolutely paranoid. He works 7 days a week, and he's always frightened about who might be coming for him and who might be out there catching up. Feels like a very different message from what we're hearing from ASML here. I think I would have liked him to be a little bit more paranoid rather than quite so self-confident.
And that's also a big difference between a founder-led company and some CEO that's been brought into the company. I think it's worth just focusing a little bit on the system-level workaround that the Chinese have been developing, right? That I alluded to. So this is CloudMatrix, which is, I think, a genuinely interesting, counter-argument to this guy at ASML, where what Huawei have done with, they have a 384 chip cluster that effectively makes up some of the we talked about the 9x performance gap, right? So you can actually start to, with that cluster, start to catch up on the performance that you're missing from the chips that you've made with these ASML machines.
Interesting. So the story might be wider than he is letting on there.
Well, no, it just goes to like Andrew's point that, it's a strategic imperative for the Chinese. Like, these people are not idiots. In fact, they're the opposite of that. They are incredibly smart, and they're throwing an intense, insane amount of resource at this. I'll figure a way.
100%.
People have always figured a way.
Eventually, they will.
This dude maybe needs a bit of a healthy dose of paranoia, which you make a great point on, Jensen. It's that founder, that thing you just can't, you can't.
Founder mode.
Founder mode. Right.
Now let's jump from founder mode to fusion. Fusion. The beautiful energy source that is always 30 years away. Well, suddenly it looks like 30 years have become 10. A new consortium was recently announced. It's the UK Infinity Fusion Consortium. And it sounds very British, and it is in Britain, but it was funded by one Bill Gates, who is very much an Americano. The tech is Type 1, which is US fusion tech. So it seems like it took American capital and IP, the Stellarator is from Wisconsin, to make it credible. Nevertheless, it's a 400 megawatt UK plant targeted at the mid-2030s. The site is not yet announced, but it is quite exciting, isn't it? Now, Lomax, is this going to solve our energy crisis?
Well, it may do. I mean, we do have like some of the highest electricity prices in the world, both like especially commercial energy prices, which is a material bottleneck for many things, both in terms of cost of living, but also importantly for AI and data centers. Nuclear energy is, when you look at the levelized cost of energy, I think people sometimes forget this. Nuclear is not one of the cheapest, However, that's a current nuclear fission. If you crack fusion, and on a long-term basis, then the levelized cost of energy will come right down. So it will bring an abundance of affordable or cheaper electricity for the UK, which will be awesome. I don't know. I mean, if you look at the Hinkley Point at the moment, there's two projects being built at the moment. One in Somerset, one in Wiltshire. They are years behind. So I think the goodwill here is excellent. It seems like a great consortium with the IP from the US with Tokamak Energy, which has been developed in the UK. And I just never underestimate the power of NIMBYism and the difficulty of all of the regulations that we've built and layered upon layer in the UK that end up constraining the ability to build this. Interestingly, at the beginning of this year, the Parliament approved this kind of critical national infrastructure concept, which does speed things up, but still to be tested yet to see actually. So we'll see how that goes. But that would be amazing if you can combine, what this consortium that's been pulled together with this critical national infrastructure framework that will streamline these nationally important projects, then that would be a massive win for the UK. If you're the US company Type 1, there's maybe easier places to do this than the UK. But anyway.
Now, there could be something good coming of it. But Andrew, is there a risk here that we're going to end up in the same situation as we do in semiconductors and AI models, where we're really just becoming strategically dependent on IP from the US and building on top of their tech stack as opposed to building our own?
I think the UK owns one of the critical enabling layers, right? Because it's the superconducting magnets.
Yes.
And that may be enough. But owning a bottleneck component can be very helpful. But if it works, it is frustrating. We've got a bunch of UK fusion startups that it's not one of those that's having the money put behind it. And as fusion, I think, moves from sort of science projects, as you said, that it's always 30 years away, to infrastructure finance. I think it will be decided as much by the capital and where the capital comes from and who it's given to, as much as the the incumbent companies, the startups themselves. So, if you pick the right technology and the right winner and you get a head start because you've got, infinitely cheaper energy, you could argue that in itself is a win for the UK, regardless of who provides, the technology, regardless of whether it's the Americans building the reactor or not.
But 400 megawatt, it's good, it's nice, but it's still, it's experimental. It's not like it's going to move the needle in a major way.
You've got to start somewhere, right? It's the same with my argument on the AI race. You can't just jump in, going from a standing start now to being nuclear power with thermonuclear weapons and the delivery system and everything else you need around that in order to be a defensible and taken seriously as a nuclear power would take a huge amount of money and knowledge and time. So when you want to be one of the first adopters of these technologies that scale, you've got to invest early, and you've got to
it seems like we've been waiting for U.S. capital to invest. Is there an argument here that the U.K. government should mirror and make some of these long-dated commitment to crowd in private capital and put that behind UK IP?
I believe so. The UK lacks a strategic plan for critical technology, the things which will really move the needle in the next 10 to 30 years. That includes fusion, that includes quantum, that includes AI, includes some of the defense technologies. And without those clearly prioritized in a sort of coherent, battle plan for the United Kingdom, it all feels a bit Heath Robinson and a bit reactive. And that's what I would like to see. I would like to see the UK take risk and spend money to achieve some very coherent strategic goals, which will impact generations to come. And that's just that we're seeing that lack of leadership across the current government and have done across every single sector, from the SDR, Strategic Defence Review, to other stuff. So I don't think that's going to change until we have a change of government. But you're absolutely right that the UK needs to understand and think about, what's most important.
Is it purely a lack of strategic vision? I guess Sunak had his headwinds, but is known as somebody who understands business and finance. It seems like he didn't quite manage to get a strategy outlined. The current government have tried to do some things. They've got the new UK AI fund, but it's $500 million. It's not the billions and billions you might need to really move the needle in some of these industries. Is it simply just because we are becoming too poor as a country to be able to put the resource behind some of these moonshots that we should be taking if we want to leap ahead?
Well, we're not the United States, right? We don't have that GDP, but I think there's a question of, can you afford not to? All you do if you don't risk on the important things is become poorer. And I think it is like a vision. There's nothing to stop this country, this narrative that somewhere we're a down and out power, I think is half the problem. We've got to be bold, we've got to be confident, and for hundreds of years we've managed to punch above our weight, and we have the smarts. And if we have a vision and back that with capital and cash in the right places, we'll deliver returns for the nation.
For now, those are the main segments of the pod. We'll jump over to deal of the week. Anybody's got a cool new deal they want to share?
You do, Mads.
Well, I will then talk about SAP that have just acquired Prior Labs, a German company. Now, what does Prior Lab do? They build tabular foundation models. It sounds delightfully geeky. It's pre-trained AI for structured data. So that's the data that lives in tables and spreadsheets and databases. And that is, of course, important because that is where most of the enterprise data in this world live. SAP, they've got a phenomenally big pool of data that's structured that way in all their enterprise deployments. And because they could see so much value in this foundation model, they have bid and they've acquired the company for 1 billion euros. It sounds like a lot for a company that's barely 2 years old, and it is. And I think big kudos to the founders for pulling this one off. A 15-month-old startup. They've only raised one round, which was a 9 million euro seed in February 2025. So kudos and congrats to the founders and to Balderton, Atlantic Labs, and XTX for what seems like a great seed investment. Now, the week ahead, what are we going to look forward to? We know that we have had Anthropic on IPO watch. There's a board meeting coming up where we're going to be discussing a potential IPO. I don't think they're going to IPO right now, given the amount of money private markets are throwing at them, but watch this space. We're also going to have a follow-up on the EU AI Act Omnibus trilogue. It's rumored to be the May the 13th, and the whole idea is that's going to be the continuation of the discussion between the Commission, the Parliament, and governments about whether we can delay or reform some of the EU AI Act obligations before they are put into force and could risk damaging European enterprise. We also, if we look east, we have Tencent's Q1 earnings coming up next week on the 13th, and it's a good proxy for China's AI. They have a big cloud business and other businesses tied to that, and will tell us something about where that is heading from a Chinese perspective. If we look to the other side of the pond, the Fed leadership transition, Wash confirmation should also be happening next week. Powell's last day as chairman is the 15th of May. He said to everybody he will stay on as governor, even if he's no longer the chair. But we also know that there are expectations of the Trump White House that a new chair will bring a new focus on potentially lowering interest rates, which is complicated in the current climate. Watch the space. And then finally, maybe a little bit further out, we've got the SpaceX public S1 filing, rumored for the week after next. It will, as we spoke about last week, be the biggest IPO in history. Everybody's waiting to see that public announcement once it comes out. That was it for this week, gentlemen. It's been a pleasure. It's been a gift. Thanks for bearing with me as I took over Dan Bowyer's chair. You will be glad to know he's back next week to guide shenanigans through. But yes, for now, thank you very much and have a great week ahead.